Hey, what's up, my friend? So, in today's lesson, right, you'll learn, right, how to buy low and sell high. I know that this is a saying that you've heard often, right? That, if you want to make money in the markets, you need to buy low and sell high. But the question is, how? Right? So, this is not like, going down to a supermarket, right, where you want to buy some groceries. For example, if you want to buy some apples, naturally, you know that, if apples were selling 3 for $2, you know that is a pretty reasonable low price to be buying apples. And if apples were selling at, let's say, 3 for $20, you know that that's a pretty high price. Intuitively, right, you have a frame of reference. You have an area of value, a value in your head, right, where you know how low Apple should be priced. But when it comes to trading, this frame of reference, this level or low price to reference against your trading decisions, right? It's lost. It's not there. Unlike buying, groceries in a supermarket. So the question is, how do you actually apply this concept in trading? How to buy low and sell high? So this is what we'll talk about in today's video. But first, if this is the first time you're watching my video, right, I would like you to, hit the thumbs up button, right, and subscribe to my YouTube channel. The link is all below, right? This way, whenever I publish a new video, you'll always be updated. Sounds good? Do it right now and let's get started. So as I was saying, right, how do you buy low and sell high when you're trading the markets, right? So what you need is a frame of reference. You need to have a technique, right, where on the charts, right, you can say that, hey, this is a relatively low price and it's a possible time to enter the trade. So let me share with you two techniques for today's training. So this is my charts over here. So for example, this is Euro Canadian, right? And if you're looking at the charts of this right now, right, it's if you're new to trading especially, this can be overwhelming, right? Where is the low price to buy? Do I buy at this 147 level because it's the lowest point in the chart? Not quite, right? Instead, what you want to do is to apply simple technical analysis to give you a frame of reference, to help you identify area of value on your charts, right? So you know what is low and what is high. Okay, so first, how do you identify, where is, low prices on the chart? The first technique that you can use is what I call plain old support and resistance. Okay, so let's draw, a few support resistance levels so we know what is low and what is high. So from the looks of this chart, right, what I'm seeing here is that this is a possible area of support over here. Okay, I'll put it up slightly higher. Okay, so this is an area of support over here. So you can see that as the price come into this area of support, okay, this area of support, this possibly, right, is a low price in the market. Why is this a low price? Because if you look back historically, the price has come into this area of value, came in once, bounced away, came in twice, bounced away, a very strong rally, came in for a third time briefly, bounced away, came in for a fourth time, bounced away, and now it came in back for a fifth time. So again, we are not dealing with certainty over here. We're dealing with probabilities. And there is a probability, there is a possibility that the fifth time over here, the price could still, have a bounce. We're not expecting a huge, big bounce like this. Because if you look back again at this price action of this chart, each bounce, right, is subsequently getting weaker and weaker. How do I know that? Again, if you look at the chart, right, each bounce, the first bounce, this is a pretty, okay, this is actually the second bounce, is very strong. Then the third time, it got only this far. And then fourth time only got this far. So you can see that the bounce, right, seems to be getting weaker and weaker. But the fifth time, right, we could still get a bounce, right, but we're not going to expect too much, right? So again, back to where I was saying, right, this is an area of value on the chart. This is where you could possibly look to buy low and sell high, right? So if you want to buy low, this is a area on the chart that you want to focus on. So now, we have no idea, right, that the area on the chart, right, the 148 level, right, about here, 148 level, is going to hold. We have no idea. Okay, so this is why you don't see me often, just buying blindly in front of support. I don't just simply put a buy limit order and buy when the price is at support. Instead, what I want to have is a so-called confirmation by the markets that, hey, the market is about to reverse higher. So what confirmation am I looking for? Very simple stuff, like a false breakdown, rejection of lower prices, or just simply a strong bullish close. And in this case, we got a strong bullish close. Right, for those of you who study candlestick patterns, right, we call this a bullish engulfing pattern. You can see that this candle over here has engulfed the prior candle and it has closed strongly above, right? above the previous candle high. So this is a sign of strength, right? Telling you that, hey, buyers are stepping in at this area of value, and there's a good chance that the market now could, hit higher. So now the second part to the question is buy low and sell high. Where is a point where you can sell high over here? So now, when you want to sell high, again, the same concept applies, right? You want to ask yourself on the chart, where is a high price on this chart? So again, as you've noticed, right, this is a high price, this is a high price, and this is a high price. There are so many higher prices over here. So which level do you so-called, target? So now, a little bit of common sense over here would tell you that notice that the swing up higher is getting shorter and shorter, right, as I mentioned earlier. So if you want to, look to sell high, naturally you don't want to be gunning for this absolute highs because the probability of the price reaching that highs is quite slim. Okay, so to be more conservative, you want to ask yourself this simple question. At what area on the chart, or at what level on the chart, might there be opposing pressure coming in, right, that will go against my trade? So for example, now that I'm long, right, at what level on the chart might sellers come in? Well, you know that, sellers might come in at swing high, might come in at resistance, they might come in at, a previous support term resistance. So if you look at this chart, right, these are possible levels where sellers might come in. And if you ask me, right, if you're more conservative, right, this would be a key level to be paying attention to at this swing low over here. Because if you think about this, right, this is actually a minor support, right, and you know that support can become resistance. So if you want to sell at a level that there's a good chance of you, taking profits, right, I would say this is a good level to be selling. Okay, so this is how you can actually technically call, sell high at this possible level, so you have a good chance of, exiting your trades for just one swing in the market. So in this case, the market did come into this previous support turn resistance, right? Probably this is going to be a winning trade for you, and then the market reversed down, and then finally hit up higher again over here. So again, as I've said, right, there are multiple levels where you can sell high, and it's really up to your own trading goals, right, and your own trade management to decide which level do you want to sell high. But conservatively speaking, right, the first level that obstructs your way, that comes in and say, I'm going to stop you, I'm not going to let the price move any further. That first level, that swing high, right, is the first level that you want to be paying attention to, because there are numerous options you can do. You can look to take partial profits, or you can look to exit your full position. That's perfectly doable as well. Okay, so this is how you actually buy low and sell high. So let me walk you through another example. Okay, this is for Euro Canadian dollar against the Norwegian kroner. So if you look at this again, look at this chart. Where is an area of value on the chart? So again, you just want to draw your support resistance. I have a lesson on this. I'll put the link somewhere below on how to draw support resistance. Again, I will see though this is a possible level that you might want to be trading off. And even this one over here. Okay, you can see that the market, let's focus on this recent one. It broke out, tested once, then it hit higher, breaking out the previous high, retested twice, break out again for breaking out the previous high, tested the third time, slight rally, tested fourth time, then break out, retrace, hit the highs and retest the previous swing high over here, and finally coming back and test down for I think a fifth time over here. So now, you know that historically this market has bounced off this 844 level number of times, 3-4 times, right? And the question is it going to hold for the fifth time? Will it break or will it hold? Again, I have no idea. I would rather let the market give me clues, right, to whether it wants to reverse higher or it's just going to collapse and drop like a rock. So in this case, again, I just look at price action, look at candlestick patterns to see, how the buyers and sellers are interacting. So if you just look here, over here, you can see that this is a very, again, what we call a bullish engulfing pattern. You can see the price tried to break down lower over here, but the sellers just couldn't break below support. And the next candle, buyers took control and close right back above the previous candle high, right? Very strong bullish candle. Just look at the range. So this tells you that, hey, now the buyers, they are in control. So you can go long on the next candles open, and just briefly talk about stop loss, right? Where do you want to put your stop loss? So for me, right, usually I set my stop loss, right, a buffer, a distance below this swing low. I don't just put it smack below the low. Reason being is that often, right, the market can just retest the previous low and then reverse higher. If you look at it, right, this portion over here, it retests this prior lows, then it hit higher. Came down lower, retested this lows and this lows over here on this portion here, then you hit higher. And now when it comes back down lower, you retested this lows, taking out the stops below, right, this area, and then now it seems to be heading higher once again. So this is why I want to give my stop loss, right? Some buffer just below the lows. Usually I just use one ATR. So to quickly run you through it, right, just pull out the ATR indicator. Okay, I usually use a 20 period ATR, but it's really not going to make much of a difference. And I use the SMA. Okay, so the value here right now, it's about 75 pips. So what I do is I identify the low of this swing low. I minus 75 pips because I know that one ATR over here, it shows that it's about 75 pips or so, right? I mean 0.0745, right? So I identify this low over here and minus by 0.0745. Okay, and that is my stop loss. So now the next question is, I have already identified an area where it's low, right? This is a level, an area on my chart where I've defined that, hey, you know, based on the past price action, based on the historical data on this chart, this seems to be a relatively low level to be trading. So I want to be buying here. Next question is, where is a high price on the chart? Or rather, at what level, at what area might sellers be coming in to push the price down lower? So if I look at this chart, right, one thing stands out to me is that this area over here, this area of resistance is where sellers might be lurking, right? So that is, to me, is a high price, right? Because there's a good chance that the market could reverse from there. So that is a frame of reference I'm using, right, to look for potential target profits. So that is an area that I want to sell at that this area of a resistance. So in this case, the market, it did hit higher, right? And you have to swallow this retracement before, you know, it finally hits your so-called target profit at this highs over here. We'll talk about trade management later on, right? But I just want to, you know, walk you through the concept of, you know, buying low and selling high. So let's have a look at one more New Zealand yen on the aspect of support resistance before we move on to the second technique. So support resistance, again, for this New Zealand yen, if you just look on this chart, okay, I want you to do this with me, right? Look at this chart right now and ask yourself, where is an area of value on this chart? Where on this chart, right, where has it shown, right, that buyers have repeatedly stepped in, right, to push the price higher? Just take 5 seconds and identify this, right? Pause this video whatsoever. I want you to do it right now. 5, 4, 3, 2, 1. All right, so if you have done it, right, what I'm seeing over here is that that there is a key level over here, right? There are multiple, right? But I would say the key one is this one actually over here. Okay, there's actually another one over here. Somewhere about here. Okay. But nonetheless, I want to focus on this one over here. So let me just remove this for now. So why is this a key level? Because again, if you just look at the charts, right, ask yourself, right, every time the price bounces around the 72.30 level, what happens, right? So it came in once, had a bounce, twice, had a bounce, came in thrice, had a pretty weak bounce, and then a very strong one, and then came in for a fifth time over here at this 72.30 area. So now at this point, you have actually a very strong price rejection over here. You just look at this candle. This is a very strong price rejection, but I'm sure as hell that I'm not going to trade this because the range of the candle is very large and my stop loss is going to be pretty darn ridiculous. So usually I won't trade such strong price rejection. However, the subsequent candle might offer me a tighter stop loss, right? And it's an opportunity that I could still get on. So if you look at the next candle, which is this over here, now this is something that is more reasonable. This candle, I think it's another bullish engulfing pattern. So again, you could go along on this. Sorry about that. Okay, this candle over here, right? This tells you that right now the buyers, they are in control. So you can look to get long on the next candle open, which is this candle. Now, where do you set your stop loss? Again, you don't have to set your stop loss, right, at this referring to this swing low over here, because it's going to be pretty extreme. What I can do instead is to refer from this low instead. Because if you think about this, this is the area of support. The area of support is over here. It's not over here. This is just a swing low. So the area of support is over here. So if you want to set your stop loss, right, you can actually refer this area of support or just this swing low. Again, set it 1 ATR below it, right, and that could be your stop loss. The next question is, where is the price level on the chart, right, where selling pressure could come in? In other words, where is a potentially high price on your chart? So again, if you look at this, right, there are a few levels that you will probably identify. One is over here, and one is possibly over here, right, where this again, previous support, right, that could act as resistance. And there's another minor one over here as well, another swing low over here. So again, depending on how aggressive or how conservative you are, right, you could look to, consider taking profits at this level, or even this level, right? For this one, it's the most aggressive of all because it's the furthest away and the most unlikely that price could reach. I mean, not saying that you will never reach, but the probability is slim, right? So you have to be honest with yourself and ask yourself, what are you trying to get out of this trade? Are you going to try to capture a larger swing, or you're going to be perfectly happy with just taking small chunks out of the market? So these are possible high prices on your chart, right, that you might want to consider taking profits. So in this case, the market, right, it did hit this level and possibly even this level over here, okay? And yep, it didn't hit this one over here, as I said earlier. It's pretty far. Probability is quite slim, right? So, but I hope this gives you a good idea to, how to actually buy low and sell high. And this entire concept can be just reversed, right, on how to actually sell high and buy back your trade or cover your short, right, at a lower price. So this is for the support and resistance technique. The second technique that I want to talk about is this one over here. So let me just share with you. So if you look at this, okay, so dollar sing, this is a daily time frame. Okay, as you can see right over here, dollar against the sing. So you can see that not always, right, the market, right, the market structure is always, where it bounces off support resistance nicely, because sometimes the market could be in a trend, a pretty strong trend. And now the question is, where is the area of value on the chart? Where is a low price point in this strong uptrend? Okay, so this is where we use different techniques. So for example, if you look at this chart over here, dollar against the sing, you can see that the key area of support, right, the technique that you've just learned earlier, is not too applicable, because if you ask me, the key area of support might be, let me just see, I would possibly just draw this area and maybe this one here. I'm just doing this quickly, okay? And all this, I won't really consider this area of support. It's more of a swing low on the chart. So now the question is, okay, the area of support is now pretty darn far away. How do I identify what's low in this uptrend? So what you're gonna do is you utilize a technique of moving average. So since from the looks of this, right, I know that this is pretty much a strong trend, I would use a 20 period moving average, right? So a 20 period moving average is just this red line over here. It takes into the historical past prices over the last 20 candles, and it summarize it as a line on your chart, right? If you want to learn more, you can just Google and learn more about moving average, how it's calculated. But the key thing that I want to share over here is that moving average, right, in a strong trend or even a healthy trend, it can serve as an area of value on the chart. It can help you tell, what's a low price to be buying. So when you look at this this chart over here, you can see that the price bounced off the 20 MA once, twice, came back for a third time, fourth time, fifth, and even sixth time. So usually, right, for me personally, I like to trade this concept, right, one of two ways. Number one, after it has a breakout, okay, when you have this breakout over here, on the first retest, right, which is this round over here of the 20 MA, this is a possible trading opportunity to go long. Right? And prior to it, if you look at it, right, he has tested once. Sorry, having a very itchy cough these days. And it tested twice over here. So this is sort of like a third time it's testing it, right? And it's so-called has been confirmed, right, that the price is respecting this 20 MA. So this again is a possible opportunity for you to go long, and it's a pretty low price level. After all, it has still tested once over here, this area, tested twice, and now it's testing back this area, this 20 MA, for a third time. So how can you look to buy? Again, simple reversal candlestick patterns. In this case, you got I'm not sure what's the exact candlestick term, right? It's not I think it's called a piercing pattern, right? So you can see that the sellers came in, pushed the price lower, breaking below the 20 MA, and the next candle, the buyers stepped in, right? Pushed the price up higher, back above the 20 MA, closing near the highs. And the range of the candle is pretty large as well. So this again, right, is a possible entry trigger for you to go long. You can buy on next candle's open. Stop loss, again, I like to use it 1 ATR below this swing low. And now the next question is, where is a high price to sell? All right, so again, I like to ask myself, where might opposing selling pressure comes in? And what is very clear cut is that at this swing high is where potential selling pressure might come in, right? So in this case, you pretty much hit your target profit, right? If that's what you want to do to capture a swing, to sell high, and this in this case would probably be a winning trade. Okay, so you can see that numerous example, right, when it came back down to retest this 20 MA here as well and here as well. So one thing to note is that there is nothing magical about the 20 period moving average. I use the 20 period moving average because one look on this chart, right, it's a healthy trend. I noticed that the pullbacks are pretty shallow, and the 20 MA, right, it's a better frame of reference. If the pullback is slightly deeper, I usually classify that as a healthy trend, and a more appropriate moving average is usually the 50 period moving average. So there's a little bit of a discretion that you have over here, right, to decide which moving average to use. Okay, so but nonetheless, the key thing that I want to share is that when the market is trending, when you want to identify area of value, when you want to identify what is low, right, moving average can be helpful. So let me just walk you through one more example, right? So again, Brent crude oil, you can see over here, right? Let me just, if you look at this, right, again, this chart is similar to the dollar sign. You can see that the trend is relatively strong. And again, if you just were to, use support resistance, you draw on your chart, right, chances are, right, the price might not come to your support resistance level. So what you can do is, again, use a moving average, right, in this case, the 20 MA, and notice that over here, again, it tested once, right, second time. I might not consider this a second time because I usually prefer the price to take out the high over here, take out this high, which is this portion here, taking out the prior highs, and then retest a second time, and then I call this a second test. So this to me is the first test, the second test. In fact, let me just go back a little bit. I would say this, in fact, is actually the first test over here. The price broke above this highs. Second test, then over here it did not take out the previous high, so this is still the second test. Came up and test for the third time over here. So at this portion, you can see, right, again, we have a very strong reversal pattern up higher. Again, I will set my stop loss, just 1 ATR below the lows. If you do it right, you can see that this candle wouldn't have, stopped you out of the trade, right? Because your stop loss is a distance, a buffer below this swing low. And again, the question is, where is a high price point to sell? Again, you can consider, selling at this previous swing high. So now, at this point, right, we have covered two things, right? Two different techniques to, identify, what is low and what is a high price in the markets, right? Namely using support resistance and moving average. So now I want to talk a little bit about trade management. How do you actually manage your trades? Because if you've seen the earlier examples, right? If you've seen the earlier examples like dollar against the Norwegian kroner, okay, you see that over here, okay, our target, right, is at this area over here, this resistance. But before it reached towards this resistance, the market headed higher and then had this pretty deep retracement down lower. So if you do not manage your trade properly, you might get stopped out for a loss. Okay, so now the key question is, how do you actually, manage your trade? So there are a couple of ways to do it. Let me share with you the most simplest approach. The most simplest approach is where you trail your stop loss, right, using the previous candle low. So since you're long, right, so let's say you're long over here, okay, so what you do is that if the price breaks and closes below the previous candle low, you exit the trade. So in this case, right, you would probably exit your trade over here because this candle, it breaks and closes below the previous candle low, which is this candle over here. So yeah, you did not get to your target profit over here, but that's the trade management that we are using. We're still, protecting our open profits, right, should the market do any, sudden reversal. So that's the first technique. The second technique to share with you is to look at the market structure, okay, and then trail your stop loss accordingly. So one way is that you know that this is your final target profit. You know that this is a high price, right, and where you want to be selling. So what you can do is you can observe the higher highs and higher lows in the market, right, and then, trail your stop loss accordingly. So in this case, the market makes this high, you retraces up higher, and when it took out this high over here, okay, you can actually reference this swing low now to set your stop loss. So now if the market were to come down lower, breaking and closing below this swing low, you'll exit your trade. So this is how you're sort of, trailing your stop loss, right, as the market moves in your favor till it reaches your so-called target profit. Then finally, it does another retracement down lower. It breaks above this highs, okay, this highs, and now you can reference this new swing low as your trailing stop loss. So if the market were to suddenly break and close below this level, then you exit the trade. So in this case, if you were to use the market structure approach, right, chances are you would stay in the trade longer, right, and to withstand the ebb and flow of the markets. But the downside to it is that sometimes, right, the market could just do a sudden reversal, like goes up and comes all the way back down, and you get stopped out for a loss. Whereas if you use the trailing stop loss using the previous candle high low, that might get you out with a smaller loss. So there's pros and cons to both approach. So let me just walk you through another example before we conclude today's session. So Euro Canadian, we spoke about that earlier. So again over here, this one would, okay, let's see. This one, if we were to use a trailing stop loss, the previous candle high low, can't really see, right? I think this one, the close is very near the low. So chances are I'll just still hold on to it and exit only when the candle closes below the prior candle low, which is probably this one over here. But by then, right, it would have already hit our target profit, which is at this previous support turn resistance. Okay. Okay, so that's it. I think let's see one more example. New Zealand yen, all right. So New Zealand yen, we have a, okay, this one again, you can see that in this case, the previous candle close pretty much occurred over here. And again, by then we might not have exited at here, this level, but we probably got out at this swing high if that is our target profit. Okay, and as for the market structure trailing stop loss, you can see that the market goes up, comes down. So when it breaks above this high, now we can reference this as our level to trail our stop loss, right? Then it goes up, comes down lower. It has not break below this level, so we are still in the trade. Goes up higher above the swing high. Now we can trail our stop loss using this swing low, right? And trail it till it hits our final target profit. So depending where is your target profit that you want to exit your trade at, you can continue use the market structure technique to trail your stop loss till it hits your target profit or it hits your trailing stop loss. So these are the two techniques to share with you, right? The previous candle high low and the market structure trailing stop loss. So just a quick recap to today's lesson, right? So how do you actually buy low and sell high in trading? Okay, I shared with you two techniques. You can use support resistance and moving average, but these are not the only two, because you can use stuff like trend line, channels, etc. Those work as well. Then we talk about trade management. How do you actually manage your trade? Because most of the time, right, I'll be honest, the market doesn't just go in your favor and just boom, right, hit target profit. No, a lot of times, right, you got to swallow the retracement, the pullback that comes along with it. And that's the tricky part, because how are you going to manage the trade? Are you going to go with a set and forget approach where you just enter TP, SL and just close both eyes and let the market decide what to do? Or are you going to go with a more active trade management approach? Maybe you can use a market structure to trail your stop loss, or maybe you can use the previous candle, high or low, to trail your stop loss. Right? So these are different trade management techniques that you must consider as well. So you can see that trading is really more than just buying low and selling high. There's trade management involved as well. Okay, so that's pretty much it, right, for today's lesson. If you want to learn more, okay, I've got something interesting for you, right? You can go down to my website over here, tradingwithrayner.com. The link it's on top. Okay, so just scroll down a little bit, right? And I got a couple of trading guides for you. If you've enjoyed today's lesson, then all the more you enjoy this ultimate guide to price action trading, because we dive deep right into reading the price action of the markets, market structure, entries, exits, and much more. So go here, click this orange button, right, and I'll send to you this guide for free. Sounds good, right? And with that said, I have come towards the end. If you've enjoyed this video, hit the thumbs up button, subscribe to my YouTube channel, the link is below, and I will talk to you soon.